All right, let's talk about a name that's been lighting up the screens on Wall Street. Figma, ticker symbol FIG. This company, the king of collaborative design software, finally hit the New York Stock Exchange, and what a spectacle it's been. From the moment that opening bell rang, this stock has been on a wild ride, a real roller coaster for anyone brave enough to jump on. We saw it pop big on day one, then zigzag like a squirrel in traffic. This isn't your grandfather's slow and steady blue-chip stock, folks. This is a high-octane growth story, and with that kind of story comes volatility that can make your head spin. You need to understand what's driving these moves before you even think about hitting that buy button. So why all the commotion? Why does the stock jump 10% one day and drop 8% the next? It comes down to a classic case of supply and demand, but with a twist. After an IPO, the number of shares available for the public to trade, what we call the float, is tiny. It's a small slice of the whole company pie. Meanwhile, you have a stampede of institutional investors, the big mutual funds and hedge funds, all trying to get a piece of the action. When you have huge demand chasing a very limited supply of shares, even a small amount of buying or selling can send the price soaring or plunging. It's like trying to fit an elephant through a keyhole. Things are going to get squeezed. On top of the small float, you have something called lockup periods. Listen up, this is important. The early investors, the insiders, the venture capitalists who backed Figma from the start, they can't just dump their shares on the market right away. They're locked up for a period, usually 90 to 180 days after the IPO. This keeps the supply of stock artificially low, but everyone on the street knows that lockup expiration date is coming. The fear that a flood of new shares could hit the market creates uncertainty and nervousness, causing even more price swings as traders try to get ahead of the game. It's a game of chicken, and you don't want to be on the wrong side of it. So what you're seeing with FIG isn't chaos, it's the predictable, heart-pounding action of a hot IPO with a story that has captured Wall Street's imagination. The stock's initial journey has been less of a smooth climb and more of a series of explosive bursts and sharp pullbacks. Every news headline, every analyst upgrade or downgrade has an outsized impact because of these technical factors. Understanding this dynamic is step one. It's not about the company being good or bad on a given day. It's about the mechanics of a newly traded stock. Don't get shaken out by the noise. Know what you own and know why it's moving. Now let's get to the real meat and potatoes. Why are the big money managers so desperate to own a piece of Figma in the first place? It's because this company's business model is a thing of beauty. We're talking about explosive revenue growth that makes other tech companies green with envy. Year after year, Figma has been putting up numbers that are simply spectacular, a sign that its product is not just liked, it's essential. Companies big and small are flocking to its platform to design everything from websites to mobile apps. This isn't a nice-to-have tool. In today's digital world, it's a must-have. That kind of growth is what sends a stock to the moon. But it's not just about growth, it's about profitable growth. Hear me out. Figma boasts incredibly high gross margins. What does that mean in plain English? It means that for every dollar of software they sell, it costs them very little to deliver it. This is the magic of the software as a service or SaaS model. Once the platform is built, selling one more subscription is almost pure profit. This financial firepower allows Figma to pour money back into research and development to stay ahead of the competition, all while building a mountain of cash on its balance sheet. Wall Street sees those margins and that cash pile and starts drooling. And who is using this stuff? Everybody. Figma has an all-star customer list, from the hottest startups to the biggest Fortune 500 giants. When you see the best and brightest companies in the world all relying on one platform, you know you found something special. More importantly, Figma has incredible customer loyalty. Once a design team gets hooked on Figma's collaborative workflow, they don't leave. The switching costs are huge. This creates a predictable recurring revenue stream that investors can count on quarter after quarter. It's the holy grail for a software business, a sticky ecosystem that keeps growing. Finally, let's talk about the user base. The number of active users on Figma's platform is enormous and continues to climb. It has become the language of design. This isn't just a tool for professional designers anymore. Product managers, engineers, and marketers are all jumping into Figma to work together. This creates a powerful network effect. The more people who use Figma, the more valuable it becomes for everyone. This grassroots adoption is the secret sauce. It's a bottom-up revolution that has made Figma the undisputed leader in its space. When you combine massive growth, fat profits, and a loyal, expanding user base, you have a recipe for a Wall Street darling. A great company never stands still, and Figma is no exception. The next chapter in this growth story is all about innovation, and the magic word on everyone's lips is AI. Artificial intelligence isn't just a buzzword. For Figma, it's a powerful tool to make its platform even more indispensable. Imagine AI tools that can help designers generate ideas, automate tedious tasks, or even turn a simple sketch into a fully functional prototype in seconds. This is the future, and Figma is right at the center of it. By embedding AI into its core products, the company isn't just improving its offering, it's creating new reasons for customers to upgrade and spend more money. Beyond AI, Figma is expanding its product suite to capture more of the product development lifecycle. It's not just about design anymore. The company is rolling out tools like FigJam, a virtual whiteboard for brainstorming, and other features that help teams with planning and project management. The strategy is brilliant: land in a company with the design team, and then expand to the entire organization. By becoming the central hub where teams collaborate on new products from start to finish, Figma dramatically increases its value proposition. Each new product is another hook to keep customers locked in, and another lever to pull for more revenue. This expansion is crucial for justifying the stock's high valuation. Investors are betting that Figma can successfully cross-sell these new products to its massive existing user base. The key metric to watch here is net revenue retention. This number tells you how much more the average existing customer is spending this year compared to last year. A number well over 100% shows that customers are not only staying but are also adopting new features and upgrading their plans. For a high-growth stock like Fig, a strong net revenue retention rate is proof that the strategy is working, and that the growth runway is still long. The pricing strategy is another critical component. Figma has mastered the freemium model, allowing individuals and small teams to use the basic product for free. This gets the tool into the hands of millions of users. As these teams grow and their needs become more complex, they naturally upgrade to paid enterprise plans with more features, security, and support. This creates a seamless pipeline of new paying customers. By continuing to add valuable features to its paid tiers, Figma can gently nudge users up the pricing ladder, ensuring that revenue growth continues to march higher even as its user base matures. It's a masterful strategy for long-term domination. So, here's the bottom line, the million-dollar question: can Figma's stock continue its incredible run? For the bulls, the answer is a resounding yes, but it all depends on execution. The company must continue to deliver the blistering revenue growth that Wall Street has come to expect. Any sign of a significant slowdown could send this high-flying stock back to earth in a hurry. Investors will be scrutinizing every quarterly report, looking for proof that Figma is still capturing new customers and expanding its market share at a rapid pace. The pressure is on, and there's no room for error when your stock is priced for perfection. To justify its premium valuation, Figma also needs to show a clear path to expanding profitability. While investors have been patient with high-growth companies that reinvest every dollar, the market is now demanding to see real earnings power. Figma needs to demonstrate that it can control its spending on sales and marketing while still growing quickly. We need to see those sky-high gross margins translate into rising operating margins and, ultimately, a healthy stream of net income. The story has been fantastic, but eventually the numbers on the bottom line are what will support the stock price in the long run. The transition from a growth-at-all-costs story to a profitable growth story is key. Of course, there are risks on the horizon. The biggest one is the eventual expiration of those IPO lockup periods we talked about. When insiders are finally allowed to sell, a wave of new supply could hit the market, putting downward pressure on the stock price. Competition is another factor to watch. While Figma is the clear leader, tech giants like Adobe are not going to give up without a fight. Any stumbles by Figma could open the door for a competitor to gain ground. And finally, there's the broader economic environment. If companies start tightening their belts and cutting software spending, even a powerhouse like Figma could feel the pinch. In the end, investing in Fig is a bet on continued innovation, flawless execution, and market leadership. For the stock to be a long-term winner, Figma needs to keep delighting its users, expanding its product ecosystem with tools like AI, and successfully converting its massive user base into high-paying enterprise customers, you need to watch the key metrics: revenue growth, customer acquisition, and net revenue retention. If Figma keeps delivering on these fronts, the bulls will stay in charge. But if you see growth slowing or competition heating up, be ready to ring the register. This is a fantastic story, but in this market, you always have to be prepared for anything. Booyah!